Welcome to Asti Media. If you've ever wondered how banks make money, and whether it's possible to replicate that model digitally, you're about to find out. In this episode, I'll show you how modern entrepreneurs are building bank-like businesses without ever applying for a banking license. No marble floors. No vaults. Just smart systems, regulatory clarity, and the ability to create value through capital flows. Let's begin. Imagine this. You launch a platform where users deposit digital funds, to earn, to invest, or to lend. You don't hold their money. But you control the rails. You earn fees every time money moves. You connect borrowers and lenders. You let people pay bills, send money, or earn interest. You've just recreated a modern version of a bank, but 100% digital. That's not fantasy. That's fintech. Today, I'll walk you through how non-bank founders are using modern infrastructure to create neobank-style businesses, peer-to-peer lending platforms, bill payment apps, and embedded finance services. We'll cover the structure, the revenue model, the risks, and the digital tools that make it all possible, without needing a traditional license. That's not fantasy. That's fintech. Today, I'll walk you through how non-bank founders are using modern infrastructure to create neobank-style businesses, peer-to-peer lending platforms, bill payment apps, and embedded finance services. We'll cover the structure, the revenue model, the risks, and the digital tools that make it all possible, without needing a traditional license. Let's start with the core idea. A traditional bank makes money by collecting deposits and lending that money out at higher interest rates. They also make money on fees, overdrafts, ATM use, wire transfers, and foreign exchange. But here's the secret: most digital finance businesses don't do any of that directly. They partner with licensed entities. And they own the user relationship, the interface, and most importantly, the revenue stream. One model is the neobank. You use a platform like Unit, Synapse, or Solid, known as BaaS, or Banking as a Service, to launch an app that acts like a bank. You design the user interface. They provide the regulated back-end. You can issue virtual cards, allow direct deposits, enable bill payments, and even offer interest-bearing accounts, all under their license, while keeping your brand in front. Let's talk business model. Here's how you make money. First, interchange fees. Every time your users swipe their card, you earn a small cut, usually 0.5% to 1%. Second, FX fees on currency conversion. Third, subscription revenue for premium users. Fourth, referral commissions, for insurance, investments, or savings products integrated into your app. Fifth, float revenue, earn when funds are parked temporarily in system accounts. You don't touch the money directly, but you profit when it moves. Another model? Peer-to-peer lending. Instead of you lending money directly, you connect people who have excess cash with those who need loans. You act as a marketplace, taking a platform fee or interest share from each transaction. You don't take credit risk, but you enable capital flow. This has been done successfully in platforms like Lending Club, Mintos, and even decentralized protocols like Aave and crypto. You can also build microfinance products. Let people pay small bills in parts. Or build a save-to-buy wallet, where users top up toward a goal, and you earn a fee or float on idle balances. This works especially well in emerging markets, where traditional credit is limited, but mobile usage is high. Now, the infrastructure. You don't need to write code from scratch. Use no-code platforms like Glide, Softer, or Flutterflow for front-end. Use Stripe or Wise for payments. Use BaaS platforms to issue cards or build wallet systems. Use Plaid or Mono to connect to bank data. You're not building a bank. You're assembling a financial engine, from APIs. What about regulations? Here's where clarity matters. You must never promise bank-level protections unless you are officially licensed. Use clear disclaimers. Work only with trusted BaaS providers. Ensure that KYC, AML, and customer funds are handled by the regulated partner, not by you. Stay lean, legal, and transparent. And remember, the power isn't in being a bank. It's in behaving like one, with modern tools, speed, and focus. Where banks are slow, you're agile. Where they charge hidden fees, you offer clarity. Where they need branches, you go fully digital. This is not disruption. This is reinvention. Now you see the path. You don't need vaults. You don't need millions in capital. You don't even need to touch the money. You need infrastructure, clarity, and execution. Because in a digital world, whoever controls the interface, controls the opportunity. Build the interface. Own the trust. Monetize the flow. If you found this eye-opening, hit subscribe to Asti Media. In the next episode, I'll show you how to build your own fintech MVP using drag-and-drop tools, real-time APIs, and bank-compliant backends, without touching a line of code. This isn't theory. This is execution. And we're just getting started. This is Asti Media, where big business models meet smart solo execution. Thank you for watching.